everybody to our micro moment trading podcast today, the 20th and of August. And we're in Fort Worth, Texas. And it's not even hot today. It's pretty nice. And we have our gentleman here, Randy, over in sort of in toward Atlanta, and Tim over sort of toward Atlanta, Deshaun in Fort Worth. And is Mike is going to be here, right?
Should be.
Okay, Mike will be here in a few minutes. I want to welcome everybody. It's our standard podcast every Thursday at 10 a.m. And we have just had a super week. We're having a super week on our micro moment trading sessions. We're up so far this week. And we will probably maybe have some more on Thursday, but Monday, Tuesday, and Wednesday, and before I left to come over here for the podcast, we're up 71.8063% for the week, which is huge, which means we may pick up some more transactions today, and we could easily break 100% for the week. We're in our 68th week. Since we made this a subscription service, 68th week, we've averaged 93.02% per week over that period of time. Now, we have one stray here, and his name's Randy. Randy does not only his versions of the micro moment, which are a little calmer, not quite as fast, and he does a lot of the traditional covered calls, which he's adapted over the years. He's been with us a long time, and so he's going to talk about that. He's at fantastic returns. And Deshaun and Micah, who's just signed on. Hey, Micah.
Hey,
and Tim are our key gentlemen doing the micro moment trades. And just fantastic service. You can tune in to our website, www.micromomenttrading.com. Lots of information on that website. There's Randy's, all his programs with covered calls and modified covered calls and all kinds of things where he gets incredible leverage. We never use margin. And then all kinds of, he answer any questions. You can see what people are signing up for and what they're paying for it and what they get free and all kinds of stuff. The same way with all our micro moment trading. You can sign up for the Cal Report, which is free. It's been published for over 20 years. It comes out every Friday, and it has all the emails and correspondence from our clients in there with the answers from these gentlemen. And you can see what's going on, how people, what they're doing return wise. And it's really a great, it's called the Cal Report, and it's absolutely free. And you can sign, you click on the button, you can sign up for that when you go to www.micromomenttrading.com. So yesterday in the micro moment, and then I'm going to turn it over to Randy. Micro moment, we had a second session yesterday. Second session is when these gentlemen decided the first session, which is 8:30 Central Time to 9:30 Central Time, just an hour, and then they usually break, and they might come back if the market warrants it around 12 noon to 3 o'clock Central Time. And that's when the market closes. And yesterday, in what we call the first session, they made 12.094895% return, and the second session, which was there were 11 trades for 31.31% plus a little bit. So huge day yesterday. Great week. Okay, let's turn it over to Randy. Randy, tell us people what you do and how you do it and all kinds of stuff.
Okay.
Go ahead.
Good morning, everyone. I do lots of things, and one of the things, and usually Tim will say something or Joe, but you'll see us always keep turning our heads because we're constantly looking at our charts that are on our other screens, and we're still trading even while we're talking for the most part. So while Joe was talking, I actually did one of Tim's trades, the micro moment trade, and 2.8% return. Tim, it took me a minute and 34 seconds. I know that's pretty slow.
Boy, that is slow.
In a minute and 34 seconds, 2.8% return on my cash back now. So I could stop if I wanted today and just keep 2.8% and wait till tomorrow and don't worry about whatever the market does. And that's what the micro moment trading is. But they'll talk about that. That's not my mainstay. I still do all the types of trading that we teach. here. Whether it's a credit spread, I've been doing some credit spreads on Amazon. I've got the micro moment trading going on my SPX, and then I do all the covered call stuff. And that's what I mostly am, is the covered call guy. I also teach on Mondays the advanced charting coaching service. And advanced charting is a proprietary charting program that Joe put together. And it takes 21 different technical indicators and rolls it all into one chart. And we teach the easy to learn, easy to use, easy to read way of reading that chart to identify the beginning of the momentum rising cycles. And then we simply want to go out and buy a call at that time and let it go up and sell it for a profit. So I teach that every Monday morning. And those webinars, while they're live in the market, but they're also being recorded. So you can watch that training over and over and over again. Even if you're not there while it's going on, you can watch it later on at your convenience. So that's what's so great about all the webinars that we do here at Micro Moment Trading.
Here we go.
In addition to that, what conditions would you want to set? Oh, that's for Micah and Tim, I think.
Yeah, and let me say this: what you just saw for the other folks out there. Yeah, you can type something in or show up here, and then we'll address your questions and so on. So go ahead, Brandy.
In addition to that, I teach covered calls on Wednesday mornings. That webinar actually coaching session lasts at least 2 hours. I have a hard time making it less than 2 hours just because of all the training, answering questions, but also teaching the advanced covered call techniques that we call synthetic covered calls. And that's what Joe was referring to, where you don't have to borrow any money. You're basically leveraging your capital, because instead of buying stocks and selling calls against it, which is the traditional covered call, and I teach that on Thursday evenings at a coaching webinar, but that's the most conservative trading that you can do in the market, is a in the money covered call constructed the micro moment trading way, so that you get called out whether the stock goes up, down, sideways. You get called out, and being called out is what we desire. You get all your invested capital back and lock in the return of 2, 3, 4, 5%, whatever that it is. During my Wednesday morning coaching sessions, that service includes me sending out alerts that say, here's what I'm planning on doing in my own account. There's Tim. He just must have got a foot.
I did.
Yeah, there he goes. I can see it. I can see it on the chart. And if I was still in my foot that I got out at a minute 34 seconds.
It's his shifty eyes. It's his shifty eyes. You can see what he's doing. Micah's the same way, except Micah's eyes don't shift as much.
Right.
Yeah.
Right now, that position that I got into because of Tim's chart setup, by the way, I got in at Tim's chart, and maybe he'll talk about that when he gets to talk. But now I would have over a 10% return right now if I stayed in it. But I don't do that. I just want to get in and out real quick and lock in 2, 3, 4% return. I'm happy with that. I don't have to try to get like the most you could possibly get.
Yeah, most of these transactions on the micro moment are usually 15 to 20 seconds. It's if you go over 30 seconds, you're taking a little bit of risk there that we don't recommend. So,
right. Yeah, that was 144 to 158.
There you go.
There you go. That's 14 seconds if my math serves me correctly. I mean, I learned math like 60 years ago, and it still works. I don't know what they're doing these days, but the math I learned back 60 years ago, I think it still works today. So that was a nice quick trade, 14 seconds, making a couple percent return on the capital.
That was 144 to 158?
Yeah, 14 seconds.
Okay, fantastic. Yeah, fantastic. Yeah.
And that's what the micro, because of the intraday streaming charts, which Tim and Michael will talk about. Yeah. That's what makes it all possible. You have to have the intraday streaming chart for micro moment trading.
But what's neat about
the ability to do that?
Yeah, what's neat about these guys doing this, when you're in their sessions, you're sitting there watching the chart and you're hearing them. And you're seeing what's going on, and they're talking to you. And they'll say, I'm getting ready to prep this, or I just prepped it, and now I'm getting ready to close it. And so that's how I got in at this. I'm getting out of that, and you can follow along. That's how you learn this stuff. You learn it by watching that screen, and it's just really simple stuff. More simple on micro moment than a little more complicated on Randy, so he has a lot of management techniques.
Absolutely, it's still going, Tim.
Yeah, no, I'm back. I'm back in.
Oh, you're back.
Back in again. Okay.
I can see it's just still going. It's doing great. Back to the covered calls. The covered calls aren't quite as exciting as a micro moment trading because we're in them way longer than 14 seconds. But typically less than a week. In on a Monday or Tuesday, out on Friday, Thursday or Friday. Last week, the position, as I was saying before we started talking about the great return that Tim's getting there, with my coaching on the covered calls, I use my positions to teach with. And so I send out an email that says, here's something I've identified. This is what I'm planning on doing. This is why. And the intention is everybody can follow along in their virtual trading account so they can learn without risking any money. The virtual trading account acts just like it's a real live account. They can put it in, they learn hands-on, they're watching over my shoulder, and they see exactly how the techniques and processes are implemented, how they're managed, how they're closed out, how the profits are made. Last week, the ones that I entered, every one that I entered last week was closed out by Friday for profit and all of the capital return. So Microsoft was 8.6% return. And by the way, because of, as Joe talked about, leveraging the positions with options instead of buying the stock, I only entered $2.30 a share was my investment in Microsoft. Microsoft's trading at $209, $210, $210 a share. I only had to invest $2.30 a share and generated 8.6% return less than a week. Moderna, 11.1% return. That was only 90 cents per share invested. QQQ, the ETF for the NASDAQ 100, 10.1% return. Apple, 14.9% return, only $4.30 invested. Apple's trading at $468 a share, but I don't have to have that much capital out there in the market. SPY, which is the ETF for the S&P 500, 9.8% return. I actually did that twice last week, 9.8% return 2 different times because SPY has expirations 3 times a week. 90 cents a share invested, close that out for 9.8% return, took the same 90 cents a share, got back in for the next day, 9.8% return again. Actually, it was 91 cents, not 90 cents. I'm sorry. XBI, 21.9% return, only 90 cents a share invested. In Amazon, 17.6% return, only $4.25 a share invested. Amazon is trading at $3,274. I only had to invest $4.25 for the week, 17.6% return. And that one actually was only 1 day entry. I entered on Thursday, exited on Friday. So that's what I teach on Wednesday mornings. 11 o'clock Central Time is the webinar, but also it's recorded while I'm teaching, and you can watch that over and over again. You can watch it later on. You can be working all day, come home, and continue to learn with those webinars. So we have a good time. I've got 4 or 5, 1, 2, 3, 4, 5, 6, 7, 8, 9 positions on for expiration tomorrow, and we'll see how they go. It all depends on what the market does. But the stocks and this is one of the key things about our covered call process, different than all the things that they do out there in the market, and you hear from all the brokers and on the street. We do in the money covered calls. So that means the stock can go up, we get called out, all of our profit. The stock can go sideways, we get called out, get all of our profit. The stock can even go down, and we get called out, get all of our profit and all of our capital back, no matter which direction it goes. Now, if it goes down a lot, that's okay. We have a process, we call it management, where we continually to manage that position, generating income each week while it's cycling back up, and be able to get back out of the position at a lower cost, at a lower place than where we originally entered it, still get all of our invested capital back and lock in a profit. That's what you learn on Wednesdays.
Okay. Randy, there's a question for you there. You want to take that?
Yep. It says, are your synthetic cover calls, the puppy is barking. They have a nice, let's see, it was born in January. So about,
I've been saying you've been getting old and grouchy, and I believe it's beginning to come out.
that's my granddaughter's puppy. She's seven months old. A little Labradoodle is what it's called.
Okay.
Really, but I think it's because my wife just got back from the store and she's all excited. But anyway, the question, are your synthetic cover calls similar to the calendar leap spread, which are taught in the leaps class? No. Similar in that you buy one option and sell another option against it, but they're not the same as what's taught in the leap seminar. They're closer to what's taught in the cover calls, but with quite a few little tweaks that make them be different and make it be just a 1 week or less investment. I like to be in the market the shortest amount of time actually as possible these days. Anything can happen at any moment. There's all kinds of things out there that change the market, whether it changes it to go up quickly or change it to go down quickly. That's why Tim and Micah and Deshaun, with their micro moment trading, they can be so successful because the market does move quickly in one direction or the other. So I like to stay with the weekly options, the weekly positions, and get in and out in just a day or two or three.
Is that it?
Yeah.
You just end like that, huh? Okay. And y'all are probably wondering, does Deshaun ever say anything? Well, he's talking about as much as he normally does right now. he's a quiet guy. He sits there in the shadows, and he'll come up. He trades, he'll come up with his SPY trades, and he just will blurt them out, like people just, oh my God, there he is.
He's the pretty face.
That's right. Yeah.
On our webinar here, so
that's right,
you have to have somebody that looks nice and compared to all of us. Well, there's Micah too. He's a nice young guy.
He does good.
The rest of us are all the old guys, so we have to have those good-looking guys to kind of offset.
Yeah, that's exactly right. Yeah.
Now I want to talk about this, then we're going to go over to Micah and Tim. And this just came out today, and I'm going to put it in the editorial section of the Cal Report this weekend. And I've been saying this for years, and finally, the execs at Google heard what I was talking about and have adopted the same philosophy. Google has a plan to, I'm reading this off the email. Google has a plan to disrupt the college degree. Google's new certificate program takes only 6 months to complete and will be a fraction of the cost of college, and it's equivalent of a 4-year college degree. And it says Google recently made a huge announcement that could change the future of work and higher education, and particularly with this virus thing we've got going on, they're going to help out because a lot of the colleges are wondering if they can even open. Anyhow, it's launching a selection of professional courses that teach candidates how to perform in-demand jobs, not just jobs for them, okay? The company's calling it the Google Career Certificates, teach foundational skills that help job seekers immediately find employment. However, instead of taking years to finish like a traditional university degree, these courses are designed to be completed in about 6 months. College degrees are out of reach for many Americans, and you shouldn't need a college diploma to have an economic security. Mm-hmm. Right, Ken Walker, Senior Vice President of Google Affairs, whatever. Anyhow, we need new accessible job training solutions that enhance vocational programs, online education. Now, when I was growing up, we had vocational programs. They don't have them anymore in high schools. You learn to be a plumber, electrician, whatever. And I've told this story before. And between those plumbers, electricians, and end up being the wealthiest guys in town, along with the few doctors. That's the only thing you really need to go to get maybe an attorney to get a degree on. And this is the exact same thing. He says, in our own hiring, we will now treat these new career certificates as the equivalent of a 4-year degree for related roles. It goes on and on and on. $49, $300 for a course, which is less than the university's charge for books. And so on and so forth, and talks about project managers that they hire for now. Project managers been through this course, $93,000 a year. Data analyst, $66,000. UX designer, whatever the hell that is, $75,000. And they say the equivalent participants will have the essential skills they need to get a job, any kind of job, but they can do it now. And I talk about it all the time. And I give the example. If a lot of our clients would just give their kid when they graduate high school $2,000, put it into an account, they follow that kid, virtually with that $2,000, never puts any more in the account, follows Micah and Tim and Deshaun, and just makes 6% a week. Now, they've made 70 something, 80% so far this week. 6% a week in 24 months, they're going to have close to $800,000, 600, 700, $800,000, and then they can do anything they want the rest of their life. And if they're going to go waste time with a college degree, whatever they want to do. But that's the power of that, and that's why I'm so glad to see Google has come up with that, because obviously they have a big influence. So those guys aren't dumb, not as smart as me, but they're not dumb, and so it's good. It's really good. Okay, that was my big announcement there. Go back now. Whichever.
Wait, Joe, and is that $300 a month?
No,
or
that's for the course. That's for
the whole course.
Yeah. They make $300, and that's all the courses you need. That's all you need, and you add the equivalent. After you've taken a couple of those courses, depending on what you want to do, you've got the equivalent 4-year degree.
And they're going to hire direct from there. Wow, is it considered a charter?
Well, they're not only going to hire direct, but they say all the other companies. Their courses are designed such that if it's, of course, you need more. Just like you guys, computers, and you can really transition from one company to the other pretty easily when it comes to computer stuff. And so these people are going to have this enhancement. They've already got that, and they're not spending 4 years, and running up hundreds of thousands of debt, screwing around with that stuff. Mm-hmm. And it's huge. And now it's huge. Yeah.
What's it called again?
Well, it's going to be. I'm going to have it in the report. It's going to be called. Or it is called. It's called. Let me get back up here at the top. Google has a plan to disrupt. Blah blah blah. Google's new certificate program takes only 6 months to complete and will be a fraction of the cost of college. And they've got a name, Google Career Certificates. Is the name of it.
Interesting.
And it's just not for them. It's designed so you can go. Obviously, it's sort of high tech stuff here, but go anywhere. And then they can bring up. They used to have trade schools, which they had when I was in high school, and those guys would get out of. And even to this day, there's some colleges that have trade schools. They get out of those trade schools. They don't go to the whole college, and there's a company that pay them $100,000 a year to go to work for them immediately, and they'll train them the rest of the time. So I mean, it's just huge opportunities out there. Not spending 4 years, whatever. So, oh yeah. Now, you guys, Gary's asked a question before, so Michael, why don't you answer Gary's question there?
Let me get back to it. Lost the screen. Oh, there we go. So the conditions to warn a second session is when we have something that we know, as you guys know, maybe we don't predict direction. There's nothing, with our stuff that say, we think in 10 minutes it's gonna go up or down. We never worry about that up or down. We worry about the current momentum. So a second session, first of all, aligns with our personal schedules, because we do this very much in our own life. We use our own accounts, things like that. So part of it's just availability. That's why we have more people to be able to do it more often. But then the biggest thing is just volatility. Say your second session is like an hour before the market close and a Fed rate announcement comes out. We know that Fed rate decisions have huge effects on the market. So every time there's a Fed rate decision, I'm going to go back preemptively for a second session, just based on the conditions on that day. So.
And let me say one thing about Dejan and these Michael. He hadn't been with us that long, but I've known him for a long time. Extremely smart guy. He has a success rate of over 90% on his trades. That is huge. That is absolutely huge.
80%.
80%. Why you say 80 to 90?
Well, it's because it changes as I get more trades.
Well, you can't be out here anymore. You weren't supposed to speak up.
Nope.
That's why I said 90. Okay.
A little unplugged or something, though, Deshaun.
Yeah. Okay, who wants to take Roberto's?
Tim,
Okay.
if you're willing.
What are the thoughts of okay. Hello, what are your thoughts on the TD Ameritrade issue, alternative brokers? Well, right now they have completed their upgrade to their software and their architecture, and it seems to be working better. Haven't really been tracking the lag, but it does seem to be a little better right now. For me, I'm going to stick with it and see how it does, but I'm also checking out some other platforms. But, nothing else comes really close to what we get with TOS or with TradeStation. So I'm going to give them the benefit of the doubt right now, and hopefully they are getting their act together. Deshaun, do you think it's gotten better in the last day?
Yeah, because I'm always having like 2 option chains up on my screen, and I mean it does seem a little better. There is still like a delay from E-Trade to TD Ameritrade.
Yeah.
It seems to be from 1 to like 3 seconds now, rather than from 1 to 5. But sometimes it is like following it, tracking perfectly. So it's better.
Yeah, that's my experience. I mean, I had a bunch of trades in the afternoon yesterday, and it seemed to be working pretty well. Yesterday afternoon. So I'm going to stick with it. I know that they're aware of the problem, and they're putting a lot of effort into repairing it, and hopefully this upgrade that they just completed will do the trick.
Yeah, now just a comment on that. I'm not going to comment about TD Ameritrade or not. I know they had issues. Every broker has an issue once in a while. I like Deshaun, I have 2 different broker accounts. Mm-hmm. So I have 2 of everything. I have 2 computers. I have 2 internet systems. I have two brokers. I'm the one that the old always be prepared.
Yeah.
If you're reliant on being able to trade to generate your income, I always want to have a backup. So if something happened to the one broker platform, I could start doing micro moment trading on the other. Yeah. So if I wanted to do that now, if I have covered calls, I can't switch over. But I do them in the 2 different platforms. So I always have one way or the other to trade. In fact, here I'm in North Carolina, and we had a huge storm yesterday afternoon. A half hour before the market closed, the power went out. No internet here at the house, but I have a backup internet hotspot, so I just cranked that up and continued on with the
2
day.
internets too, nice.
Yeah. So because if you don't have internet, you can't do the trading either. Yep. So I, in addition to that, I also know a place that there's lots of different places where you can get internet for free. I don't like to use those, but if I have to, I would drive over to that, crank it up, and get internet there as well. So it's always good to have a backup plan for things if you're in. Now, one thing good about micro moment trading is typically you're in and out so fast that if all of a sudden something goes haywire, you're just not able to trade the rest of the day or something like that. But you're not going to lose any money because you're done.
Yeah. And I have a Kroger that's 60 seconds away from me that I have actually gone there and parked outside with my laptop and traded there. So the great advice.
Groceries and games, nice.
And Randy, right now, how many brokerages do you actually how many platforms do you actually have? Over the years, I found traders tend to just kind of acquire. After a few years, you get certain situations where you need to open an account here, open an account here. How many accounts do you actually have now?
I just have 2 broker platforms. I have the original one that I was using to just trying to buy and sell stocks way before I even knew about compound stock earnings or micro moment trading now. And then I opened one in what's now called E-Trade. It originally was Trade Monster, and it went to Options House, and then it's gotten bought across the time, but it's E-Trade. So I still have those 2 that I go back and forth. I actually use the E-Trade one when I'm doing all my teaching. It's pretty easy to use, but there's not any one broker that's the best, right? There's lots of brokers that they have fine platforms, they have low commissions, They're easy for to use. You find one, you like it, that's fine. I don't tell anybody that they should change to something else. But if you have one that constantly has problems or has extremely high commissions, then you might want to consider maybe switching. But that's up to you. Don't use Robinhood.
I can't believe this statement by Bob, who's obviously is trying to suck up to Deshaun after he found out about his high closure rate. He says, this is from Bob. Nice to see Deshaun. There you go. Just tell me about it. Is that not sucking up? Now, Maggie, on that thing about the brokers, Maggie says, because, right, says Robert, I just switched to Tasty Trade. I can't believe that name, Tasty Trade. What a goofy name like that, Tasty Trade. Because their commissions are going to save me things moved on me, save me a ton of money. 25-cent puts or calls cost $32.50 on TOS and $15 on Tasty Trade. That's round trip, in and out. Okay, Maggie, thanks for those comments.
The only thing I will say, Maggie, is make sure if you ever find really cheap commissions, bring up your original platform next to it, bring up the chains next to it, and compare the option prices to make sure it's up to date. Because data, the main expense of a broker, well, a lower end broker, is the data stream itself. It's getting that information in real time and passing it to you. That costs them a lot of money, and it costs them less if it's slower. So make sure your options are still real time and fast enough to be able to make the trades on. Otherwise, it'll affect you negatively in the long run. So just compare those really quick.
Randy, did you get this one from Steve? Are your synthetic covered calls similar to calendar leaps spreads, which are taught in the leaps class?
Yeah, I answered that.
Oh, did you? Okay.
And the short answer is no.
Okay.
They're better. I mean, actually, I think they're better because it has a lot more management processes available, and it's highly aligned to the overall covered call teaching. So I think it's actually a lot easier than the leaps process.
Did somebody answer Roberto? He said, "Hello all. What are your thoughts on the TD Ameritrade issue?
Yeah.
Alternative brokers." You did okay to answer that.
We got that.
Okay, back is Maggie. Roberto, you're welcome. That's from Maggie. And Bob says, not sucking up. Great to see all the guys. There you go. Oh my goodness. Okay. Now we have not turned it over to Tim. Now Tim's strange. Look at his eyes. I mean, these are guilty eyes. They would be a song, Guilty Eyes. There's a song something about guilty eyes. Have you done anything else while you've been sitting there?
I just did 2 trades. That one you've already got, and then I did another one, 162 to 167.
Whoa, fantastic! These are going tomorrow's earnings. These are what we call like second session trades. It's just kind of early for second sessions, but
just continuation on that leg. That was doing it.
And I think Mike, and we've never discussed this on this podcast, but explain about all the social stuff you're doing with all the different Facebooks and all that stuff. How people can find out about that.
Yeah, for sure. So we have a lot of extra material for you guys, kind of spread between everywhere. We have a Twitter, Instagram, a LinkedIn, and a Facebook. All can be found by typing in Micro Moment Trading to the search bar of each platform. And we have something called Snapshot, which is an episode-based series where we extract small portions of the webinars. So there'll be example trades, there'll be example concepts. So whatever platform is easiest for you, you can go check that out and watch some of those. I think we're up to like 24 now. There's a lot of extra learning that you can do over there for free. So I highly recommend that. And then our Twitter, we keep pretty up to date on current events, things like that. And then YouTube, we're going to bring in some more weekly series and stuff to this YouTube channel that's not live, but pre-recorded stuff.
Yeah, let me say this on YouTube, because we're on YouTube right now. If you put in YouTube and you put in Micro Moment Trading, you'll get a number videos of Tim and Micah and Deshaun's sessions. Just the real thing. I mean, it's obviously not live, so it's not going to help you out in doing current trades. But you can at least see how they trade and how people learn from trading, because it's exactly what they're doing. Because we record those every day. Virtually 99% of the time we record one, and then we can't put them all on YouTube at the same time, but we'll take some off after a little while and put new ones on. So, and Mike has done a super job of all this social stuff. And now the other thing is we have next, the 29th, that's going to be next Saturday. We have, I don't know if you remember Tony Johnson. Tony started this stuff with Micah, the first two, and then Tony's in the reserves and had to get called up and been gone, but he's come back now. And so we're going to be reintroducing him to everybody. He's really good. It's going to be on a special, just him on the seminar. It's going to be like one of our live seminars. It'll last all day, probably 9 o'clock to 3 or 4 in the afternoon. And you can sign up. Micah, they can sign up off some of your stuff, can't they? That seminar?
Yeah, we had a sale going on Facebook. I'm not sure if it's still active. It might have ended yesterday, but we had an early bird special for that.
Yeah, I think it ended yesterday. Yeah.
Yeah, the link may work. He was going to deactivate it today, but I don't know what time. So it might still be active. It might not be disactivated until this evening. And
I put out on every day I do a micro moment newsletter after these guys are finished, kind of recapping the day. And every other day I run a complete deal on that seminar where you can there's a link there where you can sign up for the seminar. So I didn't run it today. I ran it yesterday, last 2 days this week. So I didn't run it today though, but probably on there tomorrow. But that seminar will be really, really worth it, because he has a little different take. Just like, Tim has a different take, Deshaun has a different take, Mike has a different take on these things, and that's why it blends in so well. So that's good. That's good. Okay, Tim, what's getting ready to pop out now? Another one?
No, just looking.
Okay. Let's see if more questions here. Yeah, I think that's probably right now about it.
There's only 11 days till Apple splits. Just saying.
Oh, that's right. It'll be huge.
Yeah.
I'm excited.
Yeah, I bet so.
Yep.
Well, now, and what's going on with Tesla? Isn't that coming up pretty soon? Something?
They announced it about 2 weeks ago. I think it's a 5-to-1, which will put it in the upper area of where we trade. I'm not sure the options are probably still going to be, pretty up there. And then I'm not sure if it's going to be safe enough to trade because it's so
volatile.
I don't think Tesla's even a stock, really.
Yeah. It's probably going to be so volatile. And again, I want to emphasize what these guys are doing, including Randy, is they're not buying these stocks. They're trading the options, which cost a fraction. Like Randy said, he did Amazon, and Amazon $2,000 or $3,000, whatever it costs, a lot of money. And but he did fantastic returns in the course of a week. And you only had, how much did you have in the position?
Well, $4. I think $4.10 on the
share. Yeah, that's because option is always cost a fraction. That's why you get total max leverage when you buy the option, which stands in the place of the stock. It's a long-term option, and you can buy it and you can do anything with it that you can do with the stock. Like in Randy's case, you could buy Exxon and then you can just rent it. Instead of paying a bunch of money for Exxon, you're paying a few bucks on the option. So the money you get when you rent it is astronomical returns. That's why we always quote things in cents. Like we say, oh, somebody just got 15 cents on a QQQ. Oh, man, that is fantastic. That's 15 cents on the stock that maybe they paid $1.50 for. Mm-hmm. That's huge in 2 or 3 minutes. Same way with Mike and the SPY and Deshaun's in the SPY. So, yeah.
And the way they move has to do with delta. So I won't go into it, but basically the options move right now about 40%. Where we traded, it's about 40% of what the stock does. So if you think of SPY being $337 right now, if it moves up to $338, you get $1, right? So 337 to 338, that's a tiny little fraction of a percent. Now, if you're trading your $2 option, it moves that same dollar. Your option is going to move 40 cents about. So 2 to 240 which is obviously a 20% return versus a fraction of 1% return for the same amount of movement. So that's why options return the way they do, is because they move in reference to the symbol underlying.
And we have those delta figures in the option change in our toolbox. And but it's really important to stress. I know Mike and all these guys talk about this all the time. We don't speculate. We don't speculate. They have a very definitive idea of what they're going to do based on that rather expensive chart we've got in there that tells you exactly when to get in and when to get out. All you have to know is how to read it, and that's what they teach you how to do. They don't teach you how to try to figure out if IBM is going to go up because somebody's coming in as the new president, or because they're going to pay a dividend, or all that kind of crap. That's not the game. Because we don't do that stuff. That is day trade. That's day traders, and they lose 80-90% of their money. Mm-hmm. So we don't do that. We don't do that stuff. So, any late questions there? James, who wants to get that one?
Will PDF handouts be sent and provided on the August 29th seminar? We did have a little bit of material the first time we did it, but I know Tony is modifying some slides. So I don't know his exact structure for it. He's in charge of the whole thing there. But oftentimes with Micro Moment, it's just a note-taking process because the process is a lot simpler. So usually we don't need to do the whole written material thing, and the notes are usually sufficient. But I'm not sure how he's going to do it. Yeah.
Look at that, Maggie. Look at what Maggie just said. Made 3 cents during this show. 10 cents, 8 cents, and 9 cents. I made 3 trades. Made 3 trades. Yeah. 10 cents, 8 cents, and believe me now, what Maggie just did, huge returns.
Yeah.
Huge.
Yeah, that's probably over 10% return altogether at least.
Yeah,
that's right. Yep, and we charge a commission on this show. That's what she didn't understand.
Well, and one of the important things, Joe, is she used the same money 3 times. It wasn't like more money that she's putting in. She's in and out, has a profit, uses the same money, in and out, has a profit, same money, in and out. So it's just compounding those returns with the same money, not having to add more and more and more into it.
Yeah, that's like that $2,000 example for your kid. You put it in one time, and then you just keep trading. You may trade that thing 3 or 4 times a day, and you're trading more each time, but you're not putting new money in. You're just compounding what money you do make. And exactly right. Huge difference. Okay, well, I think the big story today is Google's thing. I think it's going to be huge because they are such an influence, and all those companies out there kind of track each other and keep up with each other. So I'm sure that's going to become a real standard bearer. So. Mm-hmm. Okay, guys. Well, we're about out of time. They only allow us about 45 minutes here, and we're at 43. So if any quick last questions, we'll hold on. If not, we'll be signing off. Have I missed anybody? Do y'all see if I've missed anybody there?
I think you got it.
Okay, very good. Well, thank y'all for being here. And thanks for these late trades. I'll report them tomorrow, Tim. So thank y'all. We really appreciate it. And we'll see everybody at the same time next Thursday. Talk to y'all later.
All right. Hope everybody has a great weekend.